The big story of this week was actually the rupee upstaging inflation as the big policy concern, the policy concern number one. The rupee has been hitting new lows for the past 3 weeks actually, since June 13th. Intermittently on several days, a new all-time low has been set from 77, 77 and a half, 78, 78 and a half, 79, and the lowest was 79.37 to buy $1. On Wednesday, the RBI moved in and introduced some measures which allows freer flow of foreign funds into the economy. Basically, there are savings accounts like FCNRB, NRE, in which the non-resident Indians save their dollar savings. Now, in those accounts, the banks don't have to keep CRR SLR. That was the step that the Reserve Bank introduced, which means the banks can offer higher interest rate on these accounts. Bankers, however, told us that they're not interested in those accounts so much because they are getting cheaper domestic deposits, from you and me. So they're not interested in paying more for foreign deposits. Therefore, the Reserve Bank steps may not necessarily increase the dollar flows and really prop up the rupee. The announcement of these steps was more a warning to speculators. If you short the rupee too much, RBI will come with steps. That perhaps was one reason why the rupee recovered. But it's not really recovered too much. I mean, we are not seeing it going towards 79 and 78. And that is because there is a fundamental trade deficit and current account deficit. Our imports are getting much larger than our exports simply because the price of crude, the amount of crude, price of coal, the amount of coal we import, price of fertilizers, all this is higher. These are costlier imports which, we cannot bring down. The only way that we can resolve it is to allow the rupee to depreciate a bit. It's not a bad thing. The rupee has not been a bad performer. If you looked at the entire range of emerging market and advanced currencies, the rupee has been a middling performer. It's not done badly at all. A little bit of depreciation, slow depreciation is good because unnecessary imports will be avoided. It will become too expensive to import, to buy an iPhone, for instance. And that will automatically lead to a balance in the trade deficit. Net, a gradual depreciation of the rupee is still expected.